Thanks for being with us. My name is Darrell Kwao. Now, Governor of the Central Bank, Dr. Ernest Addison, has assured there is adequate dollar reserves to cater for financing of imports from the second quarter of this year. There were concerns that Ghana may struggle with its balance of payments needs following the delay in the approval of the IMF program. Let's listen to the governor address the press Monday.
Yes, I mean, we all know that central bank financing is not necessarily a good thing for inflation. But in the interim, when you don't have any other alternative, it's better than chaos. But now that we have a plan, now that we have agreed with the fund on the macro framework, the agreement is to put an end to the central bank's financing. And that's why we think that the revenues that are projected for 2023 would have to be recognized in order for us to stick to this zero financing commitment for 2023. So you're saying that, well, the IMF program is delayed. What would be the impact on the balance of payment situation? We are watching that case very carefully. We were all expecting that the IMF board would have met by the end of March, but that is contingent on obtaining the financing assurances from the bilateral creditors. Fortunately, there is progress on that front. The official creditors committee met last week. They are looking at a date in April by which time they expect to give the necessary financial assurances. And once that is out of the way, once we have signed this memorandum of understanding, once Parliament has passed these new revenue measures, we would have completed what they call the prior actions. This is what is needed for the fund to set a date for the executive board meeting. So hopefully, if things go as planned, by the end of April, we should see that executive board meeting taking place.
Well, joining me on Zoom, research lead and economist with GCB Capital, Kari Djibouti. Great to see you this afternoon. Before we tackle the assurances from the central bank on our balance of payments needs, let's talk about the policy rate hike, which we understand now to be 29.5%. The central bank citing threats to inflation. Your thoughts on this decision? Good move?
Well, yes, I think it was necessary, even if it has implications for cost of credit and all of that, and growth and recovery, given the kind of slow growth environment we are in. It was necessary because we came to the point where I think, like everybody expected, the main issue with DDP for banks would have been liquidity concerns. It turned out not to be the case. And so the Bank of Ghana's initial intervention of reducing the cash reserve ratio to inject some liquidity, and the bank's own cautious credit stance, which means they are not advancing as much credit as they would have in an attempt to protect or prevent further deterioration of capital, means that there is so much liquidity in the system. And the reason you've seen so much demand for T-bills and then the sharp decline in yield, which was a good thing for government anyway. But then in this point in time, really, you want to ask yourself, if those liquidities are not going into credit, if there is no liquidity crisis within the banking system, then it has the potential of driving inflation. And that is why it needed to be mopped up. So you realize the Bank of Ghana did not just raise the policy rate by 150 basis points, they also reversed that intervention. So sending back the cash reserve ratio to 14%, effectively trying to nullify the effect of the liquidity issues we have in the system now. It's a way of guiding inflation down. You need to re-anchor inflation expectations. And yes, we've had 2 months of decline, but those are marginal. And even at 52.8, inflation is still very high. If you considered what the projection will be for end of year, and I'm looking at around 27 to 29% levels, really, that will still have been very much outside the target band, really. So there is a need to anchor that inflation stance. You look at the examples of the US, and they have done that so far. Inflation peaked at 9.1, down to 6%, but they keep raising the policy rate because even at 6%, it's still significantly higher than their 2% medium-term target band. So it was an intervention to anchor inflation expectations. And my expectation or belief is that once inflation starts a clear path of decline sharply, maybe from the second half of the year going, where we could see the sharp declines, nothing bars the central bank from cutting the policy rate significantly if that is what is needed to boost growth. But first, we must ensure that inflation expectations are well anchored, and that is what informed the decision, in my view.
All right, next let's talk about the story we are leading with today, assurances from the central bank that we have adequate dollar reserves to finance our imports from the second quarter of this year. And as we indicated, there are concerns that because the IMF program is delaying, we may not meet our balance of payment needs. Now, the governor assuring there that we have adequate funds, but how reassuring is this, and for how long can it be sustained?
Well, I think I see the reserves just around five plus billion now. We started last year with almost 10 billion. And so if you look at the dynamics, really, the CD should have been falling quite sharply this year than we saw last year. But it's actually not exactly the case. 22% depreciation year to date is significant. But compared to what we saw in November, December last year, it's actually very reasonable and manageable. And I think the context is important. The things that drove that sharp depreciation last year was mostly portfolio reversals. And the balance of trade data they published will show that. You will see that portfolio reversals and FDI inflows disappointed, while portfolio reversals, were quite enormous. And that was the cause for the depreciation last year, dominantly, plus a number of other factors, really. For this year, DDP happened. Even those foreigners who still have exposures in Ghana and may want to move out, the question is, would they find willing buyers to buy some of those bonds so they move out? So you are not seeing enough pressure or a lot of pressure on the outflow side of the equation now. And so whatever is left in the reserves is being used to manage the imports and the many other routine stuff as a nation. And we have suspended interest payments on external debt, really. So all of those obligations on Eurobonds in January, Eurobonds in February, Eurobond coupon payment in March, and most of the other bilateral debt coupon, interest that were due for servicing, because we have suspended interest payment on some of those debts, it gave us the leeway to maneuver a bit in this period in time. And that is why you are not seeing so much of depreciation, really. And so between now till the IMF deal is secured, with the pressure from portfolio reversals, not too much a concern now, and interest suspension still in place, we should be able to manage things a bit until we get there. And that is why even with 5 billion in reserve compared to 9 billion when we started last year, you are not seeing so much pronounced depreciation. And the interventions the Bank of Ghana has rolled out on the market are not any different from what we saw last year. In fact, they still do the BDC's auction, even if the sum they auction now is much less. Of course, you can understand the gold for oil policy would have played a role in what figure they issue now, and they still do the spot market interventions. They've actually even scrapped the other forward auction for the regular market and now limited to spot market interventions. So it hasn't changed much, but relative stability compared to where we ended the year. And that is because the pressures, the sources of demand pressure on the CD that were so pronounced last year, portfolio reversals, seem to not be the case so much this year because there is no market to sell those bonds.
Meantime, you are calling for the speedy passage of the proposed revenue measures. You're saying that it's critical because government may run out of revenue to finance some of its fiscal programs. How critical is the situation we are in?
Definitely. In fact, I think it's the main issue now to get past the IMF board approval. It looks like China has agreed to support us. I've seen the Paris Club and the other creditors also on board, really. So it's a matter of time and a few meetings and negotiations here and there, and they could come out with that resolution or memorandum that we could go to the board with. But what is outstanding now is the 3 tax bills pending approval in Parliament. And given the opposition you are seeing from GUTA, from AGI, and from the many other interested parties, and especially the stance of the minority, and in the context of what happened last week where vote went away they were not expecting, really, I think there will be a lot of caution, or if you like, vigilance this time round, which may mean that if we all stick to our own stance, then there could be a challenge passing that bill, which is actually the remaining prior action now to be pushed through. And so we need that first and foremost to ensure that we are raising enough revenue, to ensure the zero financing policy works, and to ensure that we are returning the macro, the fiscal account to the levels they ought to be, and ultimately restoring their sustainability. So it may be a short-term pain, but it looks like there may not be any way around it. And that is why patriotism, I think, above everything else, should come to play at this point in time for us to get that through. We need the IMF program at all costs. We need it to rebuild the economy. And so I guess it may be in place for us all to accept the temporal challenge to get that through while we work out the modalities of reviving our economy properly in the future.
Wow.
So it's imperative we get that House bill passed. IMF will not compromise on that. And so we need to do what is needful.
Well, I don't think that the business community will agree with you on that. In fact, like you mentioned, Guta has mentioned that this could potentially lead to the collapse of businesses. But I want to thank you so much, Courage Buti, for sharing your thoughts with us. And I discovered over the weekend that you're a musician too. And so the viewers can check out.
Thank you. Yeah.
Citadel Crew. You came up with a
Yes.
song. They can check out the other side of you. The name Jesus, right?
Definitely. So go check it out on all the online stores, YouTube, the Citadel Crew. Yeah, you'll find us. Thank you very much.
All right, Courage Buti. Interesting. And so, as Courage points out, the Ghana Union of